from a trader's perspective, volatility is a good thing, right? So if something is relatively stable, like the US dollar or the euro, it's very hard to trade that and make money unless you have a lot of it, right?
That was Misha Yurchenko, the author of Bullish on Bitcoin, 37 Strategies to Profit in the New Crypto Economy. This is episode 1 of the new crypto series on the Bills with Luke Scorzell podcast. Today's episode is about everything investing in cryptocurrencies, the nitpicks, what Misha has learned from his years in investing, and some of the strategies that he puts forward in his book, including the one you just heard in that clip. So I hope you'll enjoy today's interview. It's very foundational for the series. We have 2 more episodes coming out in it thus far, so I hope you'll enjoy. And remember, listen carefully, think critically, and conclude thoughtfully. I'm Luke Scorzell, and you are listening to Bills. Today we're here with Misha Yurchenko, who is by any means a jack of many trades. He's written 4 books, worked with Facebook and Amazon on their hiring strategies. He knows Japanese. He regularly updates his blog, and he does some consulting on the side, no big deal. But today he's coming on our show to talk about his newest book, Bullish on Bitcoin, 37 Strategies to Profit in the New Crypto Economy. Misha, welcome to Bills.
Hey, Luke, thanks for having me. Excited to be on the show.
Yeah, no problem. We're excited to have you. So first, just what is cryptocurrency, kind of in the most simple way you can answer?
Sure. I think we can talk about Bitcoin and cryptocurrency at the same time because I believe most people are familiar with Bitcoin or they've heard of it to some extent, right? So I think the best way that we can describe Bitcoin in a really simple way is it's a currency on the internet, and it really, I think, serves the needs of the internet generation. And so it's not controlled by the government. It's not controlled by any banks. There's no middleman like PayPal or Bank of America. At the same time, it's a little bit confusing because it's also not a company, right? So you can't call it a company. You can't really call it a product, nor can you call it a service. So it's more like a protocol. It's more like an infrastructure and a method of communication. So it's something that is unique to the internet age, and it's really simple to use, actually. So if you were to want to send me Bitcoin now, you would just have to download a wallet for free, kind of like a browser, like Chrome or Safari, and then you could just send me Bitcoin almost instantaneously anywhere in the world. To be honest, I don't think there's a huge use case in the Western world yet, but there is in the developing world. And the reason I say that is because, right now you can go to the store and use your debit card or credit card and buy whatever, like a Snickers bar or something, right? And it's pretty fast and easy, generally pretty safe. But in the rest of the world, it's not necessarily the case, right? And cash is still king in many countries. Money faces borders. You have a lot of kind of national currencies that are badly managed. So I'm sure if anyone follows the news kind of in the past few months, you can look at Venezuela's hyperinflation. You can look at Greece, Cyprus. I think Zimbabwe is kind of the classic use case for hyperinflation. They're like $1 trillion bills. Personally, I've had experience in this, and I'm in Tokyo, Japan, which is obviously a very developed country. But I've traveled a lot in India and Southeast Asia the past couple of years, and I remember actually going to India, and I couldn't withdraw money from an ATM, and that this happens sometimes. Maybe the ATM ran out of cash, so I remember kind of walking to find another ATM, and I couldn't find an ATM for like 45 minutes, and eventually, after like 6 or 7 tries, walking like 2 miles, I could actually withdraw some cash. So this was kind of a wake up call for me, and I was like, holy shit, this is not it's not guaranteed that you can just get cash out in everywhere in the world, right? It's a privilege I think we have in the West, and we kind of take it for granted that we have access to all these services and infrastructure. So I think Bitcoin, for Westerners anyways, isn't necessarily going to replace US dollars or replace credit cards or anything. I don't think that's what people are expecting, nor am I expecting that. But I think it's more of an alternative. Maybe you pay with euros or dollars, and you can also pay with Bitcoin.
Yeah, and I want to hop in there a little bit. And the way that you are discussing it is more as a currency, and then I guess it's also an investment. So
Hmm.
I think that's kind of one of the interesting parts of Bitcoin is that some people see it as something that is very useful for um, just actual traditional currency. And I know we had an interview with Daniel Lakaye on Bitcoin and with Shane Liddell, and they kind of talked about the same thing. And it was that it can be used in countries that don't have responsible governments as that currency.
Exactly.
But then your book, getting more into that, is 37 strategies to profit in the new crypto economy. So it's
Right.
more on the investing side. So how do you kind of think about that in your head about like the currency side versus the investment side?
Yeah, so I put it in a few different buckets. So one is the investment side, another is the actual utility. So for example, I pay freelancers in Bitcoin. And one of the reasons I do that is because if you go on Upwork or other freelancing websites, they take a fee, right? And freelancers don't necessarily want to pay that fee. So there's one simple use case for actually using a currency that doesn't have a big transaction fee. The other way I think about it is um, yeah, so investment, utility, and then also just as kind of an alternative currency, um, an alternative kind of technology to what we have right now, which is kind of really centralized technology. So what's behind this is the blockchain, right? And so I kind of put it in these different buckets. My book, yeah, it's more about the how to invest, and the reason I wrote this is actually because I had started trading cryptocurrencies about 3 years ago, and this was just something I fell into, like a lot of people. You kind of jump in the rabbit hole, and a friend of mine had suggested that I look at Ethereum and Bitcoin, and I was actually working full time at the time, and one of our clients was actually in the crypto space. And when we were doing recruitment for them, so we were actually looking for developers. And when we had successfully kind of found a couple of hires for them, they requested we sent them the invoice and they requested to be paid in Bitcoin, which was kind of shocking to our CFO because no one had ever requested to be paid in Bitcoin. And so that was interesting for me because that showed that there were people already adamant about using cryptocurrencies. And then from there, I just got really interested, kind of jumped in, bought some Bitcoin, bought some Ethereum, started trading it, and then from a trader's perspective, volatility is a good thing, right? So if something is relatively stable, like the U.S. dollar or the euro, it's very hard to trade that and make money unless you have a lot of it, right? And then you can a fraction percent change is you could make a lot of money, but with something like Bitcoin, you could have a few $1,000s, and when the price goes 20-30% up or down, you can make a pretty decent profit on that. So I think from an investor's perspective, the volatility, not just in Bitcoin but other cryptocurrencies, is actually quite attractive. It's an attractive feature, at least at the moment. I don't believe it'll be like that forever.
From an investment perspective, that actually is, I mean, great. Like, I don't know when you were invested in Bitcoin and how much you had, but if you had been invested
Right.
before it peaked in late 2017, then like heck yeah, you're going for the volatility, and
Right.
that's like, oh my gosh, I just stumbled upon gold. But then you
Right.
invest in late 2017, I think it was like December 21st it peaked or something, and then December 24th it dropped $7,000. So I mean, as like a currency, it seems like that's not um, really sustainable and
No,
good. So which kind of into another question
it's
is like,
not. Yeah.
when you invest in Bitcoin, what are you investing in? Like, are you investing in this currency or some other, like, what determines its value?
Yeah, that's a really difficult question, and I don't think that anyone has a, a definitive answer. The reason is because we don't really have a lot of historical precedent or data for this, right? I mean, Bitcoin's been around for about 10 years. So, there's no Warren Buffett or Soros of Bitcoin. All we can do is we can look at the past 10 years, and we can see that the use case for Bitcoin has actually changed. The narratives around Bitcoin continues to change because it's kind of, I mean, it doesn't have a leader, right? It doesn't have a CEO. So it's really determined by how people are willing to use it. And so I think when it initially started, it was kind of seen as a censorship resistant money or currency, and it wasn't seen as really an investment or a store of value. It was seen as an alternative, and this was kind of outlined in the Bitcoin an original white paper where Satoshi's saying, look, this is essentially an alternative, post the financial crisis. If you want an alternative for your money to be risk free, this is kind of one way to do that, and that has obviously changed and over the past few years. And the store of value argument is, this is a great store of value because it's continuing to go up in price, kind of like gold, and so that makes sense. But then people are also, interestingly, they're using it, right? They're using cryptocurrencies to pay for things. They're using Bitcoin, the Bitcoin blockchain, to develop other products. And so it's not really just a store of value if people are willing to sell it. So is it an investment? Well, it is an investment, but then people are using it. So it's the narrative is kind of tricky, and there's several narratives that you can choose to believe, right? So it's not just one.
Yeah, no, and I think it is interesting to kind of think about those differences in your mind of like a currency that I'm going to use versus a currency that I'm going to invest in. Because like if I'm going to buy a car and I buy the car for whatever $20,000 with Bitcoin, and then the price of the Bitcoin that I just spent shoots up however many thousands of dollars, then I've just all of a sudden actually had a pretty big net loss on buying that car. And then if it drops, then the person who bought the car is experiencing that loss. So that's kind of like the difficulty that I see. But you are bullish on Bitcoin, not hopeless on Bitcoin. So
yeah.
So is that just on the investing side? Explain to us why you're bullish? Why is the title of your book Bullish on Bitcoin?
Sure. So when I started writing the book, it was actually it actually started out as a blog post I wrote on Medium, which was titled "What I Learned Trading Cryptocurrencies After 1 year." And this was exactly what it sounds like. It's all the mistakes I made trading. I lost a bunch of money, and just I think a lot of people actually lost quite a bit of money, right? And so I was trying to make sure that didn't happen again for my own sake, and then also sharing those lessons to other people. And so I wrote that blog post, and this was around the time after it reached 20K, and then it kind of collapsed, went down to 10, 6, and 4. And so around the time it was really at the bottom, 4 or 5K, I was writing this book. So I had to have a lot of confidence to write this, because it didn't look too pretty at the time, to be honest. But the reason I've been bullish on it, and I still am, is kind of what I mentioned. First of all, is that it does have this history as essentially the first cryptocurrency, and so it's not necessarily the best cryptocurrency. It's not necessarily the most efficient, or it doesn't necessarily have the best technology. And I think that's okay. And in this case, I mean, it has a first mover advantage, and so I think the best products are not always the first products, right? And so there's going to be others, but I think just for the just the fact that it was first, I think most people are going to start with Bitcoin, right? From a consumer perspective. So I think that's a really strong non-technical reason for why it's why it's going to be big. And then I think there's a lot of institutional investors right now that are building infrastructure around trading cryptocurrencies, and utility tokens, as well as security tokens. And Bitcoin is going to be most likely the first point of entry for them. So when they have USD or euros, they're going to buy Bitcoin, and then they're going to convert Bitcoin into another cryptocurrency. So it's really, at least at this stage, you kind of have to buy Bitcoin when you're starting out in many ways. So those are a couple of reasons. And then, personally, I was traveling a lot, and I think outside of the West, where most people live, right, there's 4 billion people in Asia, majority of the population. I think there's already a lot of interesting signs where people aren't starting out with cash. So if you look at Indonesia as an interesting example, I was there about 3 years ago. There's a company called Gojek, and they're kind of like the Uber, or the like the Uber Eats, the Amazon, the Airbnb. They do everything. They're this massive tech company, and what they started doing is, instead of car sharing, they're doing bike sharing, which is more popular because of just the infrastructure and the culture. And the problem is that most people don't have bank accounts there, just because there are a lot of lower middle income and kind of poor people there, and so they're not necessarily going to have access to banks. So what they did is they just built this app where you can get paid after giving someone a motorcycle ride, and then they partnered with all these different stores, retailers, where you could use the money you earn from the app to pay for things in those stores. So they created this massive ecosystem where you don't actually even need a bank to spend money. And that's really interesting, considering there's like several hundred million people in Indonesia, and a lot of them are quite young. It's one of the youngest countries. I think there's over like 40% of the population is like under the age of 30. So you have a lot of people just growing up with this, kind of digital first banking, and that's not even cryptocurrency, right? That's just, I mean, that's centralized. But the reason I mention it is because I think if you look at Africa, if you look at a lot of other developing countries, I think they will be doing similar things that Indonesia is doing, and a lot of crypto and blockchain companies are entering that space to try and provide kind of a more distributed and decentralized version of money. So I think it's a huge market that isn't necessarily applicable to you and me today in the U.S. or in Japan, but elsewhere in the world, I think it is.
That's really interesting because you hear people complaining in the United States about the Federal Reserve and the central bank and whatnot. But then you go to a country like you were mentioning, Zimbabwe,
Mm-hmm.
where the money situation is just totally out of control, or you have other countries where the currencies are so devalued that any savings that someone might have had is just gone. So then it becomes something that's very useful there. And then it's not a business, but it's something that you can invest in. So at that point, then it becomes kind of this optimistic investment. But picking up on one of the things that you kind of were talking about were these blockchain companies as well. And that was something in your book that was very interesting, is that you went around and you actually interviewed, was it 30 blockchain CEOs and kind of gained some lessons from them. So,
Yeah.
I mean, who are these blockchain CEOs? What do they do in contrast to cryptocurrency? And what did they tell you?
Sure. So blockchain is really the one of the underlying technologies behind cryptocurrencies, but it's essentially they're not necessarily uh, connected always. So you can have a blockchain business that doesn't have a cryptocurrency, but a lot of these CEOs that I've talked to, they've been developing their companies for 4 or 5 years now, and they come from all different walks of life because blockchain is such a new industry where these guys are coming from B2B marketing or sales. They're coming from Microsoft. They're coming from Google, mostly tech companies, and they've seen an opportunity in their domain, and they've said, okay, can we make this supply chain more efficient with blockchain, or can we make this internet browser more efficient with blockchain? So yeah, a couple big lessons learned from these guys. I've interviewed again about 30 of them, and a lot of them are, I mean, some of them are in the US, a lot of them are in Europe, some in Asia. They're all over the world. And one of the things I kept hearing was starting a business, whether it's blockchain or anything else, is not synonymous with short-term gains, right? And so we shouldn't be kind of confusing the volatility of cryptocurrencies with the business side of things, right? It's going to take time. So, for example, you could look at the internet bubble back in the 2000s, and you could say, okay, this is all a big tech bubble, but sure, many companies went bust, but the internet, kind of the core protocol behind that, obviously continued, right? And we're all online today, but you can't expect the world to change overnight when a new technology comes out. So rather than thinking in 1 to 2 year timeframes, think in 5 to 10 to 20 year timeframes. That was a big lesson I got. And then the second big lesson was to work with finance rather than against it. So I think there's a lot of Bitcoin maximalists and Ethereum maximalists or whatever, ultra libertarians who are just all out on Bitcoin and anti-government in many ways, but it's not really going to help when you're still taxed on Bitcoin. You're still operating in society, so you can't just completely ignore all the current rules and infrastructure. And sure, they're behind. There needs to be a lot of updates into how you uh, how you classify a lot of these assets because it's so new. But it's not going to be helpful if we're just if we're not being cooperative. So I think that was that was a good lesson because a lot of people in the crypto community are they can be a little bit arrogant. So
Well, and then important to distinguish here too, again, is when maybe we did at the beginning, but that blockchain is really the technology that drives cryptocurrency, right? So blockchain is this. I'll try to describe it the best I can, and then you can correct me.
sure.
But it's the ledger, and it keeps a record of like the transactions via Bitcoin, and then it's kind of like this dispersed way of keeping it. Like
Yeah.
so everyone who is on the blockchain has a record of the different purchases that have made by other people, been made by
Right.
other people on the blockchain, kind of a network of these transactions. But if you think of that network, it can be kind of used for things way beyond just the currency side, right?
Absolutely, yeah. I can give you a specific example that could be interesting for your listeners. So there's a company that I spoke with recently, and I was writing an article about universal basic income (UBI), and this company is called Harmony. They're based out of Silicon Valley. They're still working in a garage. Interestingly, they just received I think like I don't know $10 or $15 million in funding, and it's all these ex Google, Facebook, Apple engineers, really smart guys that came together, and they're creating this blockchain protocol where they're trying to distribute privacy. So what I mean by that is right now, if you go on Facebook or Google, 90% of their revenue comes from advertising, right? And so they will target you with a specific ad, and then an advertiser pays Google or an advertiser pays Facebook for that data. And the reason they can do that is because they have lots of data, right? You have hundreds of millions of people uh, on these websites every day, and they're collecting data. Now, if you wanted to, right now you could go to Facebook, Google, every other site you've been on, and you could download all your user data and all the cookies that have been tracked. You could download all your web browser history, everything you've written online. It's not easy to do, but you could do it. It would take some time. You could take all that data and then you can try and sell it to advertisers directly. Now, as you can imagine, that'd probably be pretty tough. We wouldn't really know where to start with that. And those advertisers, I don't know how much money they'd give you for that, but that's essentially what Facebook and Google is doing with your data, right? But because of the infrastructure and the way things are set up, and these are centralized companies, individually, we're not really getting a piece of the pie when it comes to that revenue. And so what this company Harmony is doing is they're creating infrastructure using blockchain where everything is on this public ledger, and all your data can be stored in a kind of in an open way. Not necessarily other people can't necessarily see it, but you can see it. And then you're able to organize that data and then potentially monetize it if you wanted to. And so you don't need Facebook or Google to do that. So that's a little bit maybe of a vague explanation, and I'm not too technical to explain how that happens, how they're going to do it, but it's essentially taking kind of taking away the centralized portion and giving you access to your own data in a very organized way. So I thought that was quite interesting.
Yeah, I mean that's like taking a shot right at Google and Facebook because
Yeah.
I mean, like that it seems like a direct shot at them.
Yep.
But also, you look at around the country and around the world right now. You just had Europe pass a huge data protections
hmm
act, and then you had California actually just passed one earlier this year,
hmm
I believe. Huge acts, but people are really looking to take ownership of their data. So that, I
Yeah.
mean, I think that's a very interesting example. But then it even goes by blockchain technology to things like banks, I believe,
hmm
and tracking how that all works. I mean, the technology is probably a little bit beyond me, but just the basic fundamentals of how it works sound um, highly interesting, and then other markets as well.
Yeah. Yeah. Absolutely. I think there's I mean most banks, the largest bank in Japan, some of the largest electronics retailers, they're all developing their own kind of blockchain solution. I mean Facebook and WhatsApp. they announced that they're going to have their own native cryptocurrency as well, which we certainly can't underestimate because there's billions of users.
So I just want to hop in here and give a little context on Facebook's cryptocurrency, which is called Libra. And it's not actually just Facebook's cryptocurrency. In fact, there are a conglomeration of partners in this Libra association that are creating this currency. So you have Lyft, Visa, eBay, Spotify, Facebook, PayPal, Uber, MasterCard. A lot of companies have joined together and are creating this cryptocurrency. Now, the unique part that Facebook has to do with it is the fact that Facebook will have the first wallet for this cryptocurrency to be used for, or crypto wallet, which will be called Calibra. And that is what will give Facebook more accessibility to all of the data that is being transmitted and all of that. So the actual cryptocurrency itself, Facebook will only be one partner out of however many partners and will only have one vote along with all the other partners in that. But the wallet, which will be released right off the bat, will be by Facebook. If you want to learn more about this, then you can go and listen to my conversation with Mark Boron, which will be coming out in the next few weeks as a part of this series, in which we really go in depth on Libra and Calibra and what impact it's going to have on the world. With that, back to the interview.
Because there's billions of users, so yeah. Whatever they end up releasing is definitely going to be, I think, positive for the general ecosystem because it's going to increase awareness. I don't know exactly how they're going to use it internally and what you can do with those currencies, but I'm assuming you'll be able to pay people directly or buy things.
Yeah, well, I mean, Facebook is launching. They have their Facebook shop thing or whatever, and
right.
Marketplace is what it's called, and then Instagram even now has a shopping feature. So
right,
it's kind of interesting to see that they could have their own cryptocurrency. In reality, that would be something that could even be exclusive to Facebook. Or you look at some of these other sites too, like Amazon. Like, why doesn't like Amazon could have its own? But so then
maybe they're working on it.
Yeah, maybe they are. So getting down to it, are you more interested in blockchain as the investment behind Bitcoin, or is it Bitcoin itself?
So yeah, it depends. So I'm pretty neutral when it comes to actually. So there's trading and then there's investing, right? So trading would be more on the short term, where maybe it's a 2-week or 1-month cycle, and I look at Bitcoin right now, for example, and I say, okay, Bitcoin's quite volatile. It's made a few runs up in the past 2-3 weeks, from 5K to touching 9K. So now is an interesting time to trade Bitcoin in the short term, right? And you can make some money from the volatility. And then there's Bitcoin as a long-term investment. So I'm still going to hold a little bit of Bitcoin for several years because I fundamentally believe in the value proposition, and I'm curious to see what happens. So I think I've got those two buckets. When I'm looking at different cryptocurrencies, that's kind of how I think about it, right? It doesn't have to be Bitcoin. It could be Ethereum. It could be another. It could be another currency. Like Tezos is quite an interesting project from France. They're training 1,000 developers to build on top of their platform. So I'm quite interested to see how that goes. But if that project, for example, if that token was showed signs of bullishness, then I would be interested to potentially trade that in the short term. But that's a project that I'm also bullish on in the long term because of what they're doing, their development community, the actual tech behind it, and a few other reasons. So that's something I would have in a kind of a long-term bag and a long-term investment. So yeah, I guess it just really depends. But there's so many cryptocurrencies, right? You have to kind of pick and choose, and there's over 2,000 on CoinMarketCap, so you can't really invest in everything.
Yeah. So I mean, yeah. I truly see kind of what you're saying about the first move advantage for Bitcoin as being kind of that they were there first. Everyone was using them first. Everyone knows about Bitcoin. That's what you think of when you think of cryptocurrency.
Yeah.
Kind of has a shady past. So that'll be interesting to see how people accept that. But then, so your book is full of investment tips, strategies for making money, the like. If you could take 2 tips, I think there were 37 in the title. If you could take just 2 of those and kind of give them to the audience when he's thinking about investing in Bitcoin? What would those two be?
Sure. So I think one of the first tips would be don't day trade. Day trading is essentially just trading on a daily basis, several times a day. Making percentage, 2 or 3 percentage point gains or losses. And there's people. I used to do that. I used to do that for probably a few weeks. It's quite stressful. You're just looking at charts all day. It's kind of boring as well. But there was a study that came out, I think from UC Berkeley, that found that something like 99% of day traders lose money. So, and the reason for that is like people aren't really calculating how much they're making or losing. They'll make so many trades and then they'll cash out and then they'll just keep trading. But then if you look over the long term, they've actually lost money. And it would have been better if they would have just bought Ethereum or Bitcoin and just kind of done nothing and let it increase in value over time, which it has. So I would say don't get too excited about that, and maybe spend a bit more time. It's not too late. It's not too late to get into any of these cryptocurrencies. Do your research and pick a few projects that you're interested in, where you can understand the technology, and then kind of invest in that way, rather than trying to game the market every day, because there's a lot of smart traders coming in as well, large institutional investors, that it's going to be quite hard to compete with them, I think. So that's kind of one big tip. The other would be I wouldn't listen to too much financial advice that's like in the media. So CNBC, for example, they have a feature and they're always giving advice, and I think generally the opposite happens of what they say. So they're not very reliable, and I think there's a lot of hucksters out there and people on Twitter and everything, and so I think it's really easy to kind of get caught up and just kind of follow one individual or one trader. But really what you want to do is you want to learn how to do these things on your own, and one of the best ways to do that is to join some sort of community. And this is not a pitch for any sort of community I'm part of, but basically, I think most bad advice is free. So if you can get in on a paid community that has professional investors, they're not necessarily charging you like some weird pyramid scheme set up. They just charge you a bit of money, and then you go and you learn from investors. And you can actually do kind of sandboxing, trading and investing, and see how your investments would turn out. So maybe if you're just starting out, getting some sort of kind of professional help like that, or being part of a community, not even investing for a few weeks or a few months, just kind of seeing how things work. And then once you're more confident, you can start putting in a little bit of money. So.
And I have to ask this one.
Yeah.
But there's a chapter in your book at, I think, the very beginning, and it's I think 5 investment lessons that you learned from Bruce Lee.
Oh,
so
yeah.
Can you kind of give us either a quick overview of the 5 or a little snippet of what's in there? I mean, I'm gonna probably have to buy the book to find this out, but
I can send it to you for free. It's okay. But yeah, Bruce Lee. So I think one of my favorite quotes of his is something like, what was it? I fear not the man that has practiced 10,000 kicks one time, but the man that has practiced one kick 10,000 times. Right. So what he's saying there is just being laser focused on one skill, and this doesn't just apply to martial arts or investing or anything, right? It's quite a broad life lesson, I think. And if you want to be an expert, or you want to be really good at something, you're going to have to obviously put in the hours. There's a whole 10,000 hour rule, and that sort of thing, and really invest your time into that one thing. And from the investment perspective, there's so many different trading tools and strategies and different ways you can invest. But if you can just find one that maybe you have some sort of strength in, maybe you have some sort of asymmetrical advantage in knowing about that industry, for example. So I came from an HR and recruitment background, so I know a lot about hiring and HR and retention and all that within companies. So I'm quite confident to kind of assess a blockchain business that's in that space. So that would be one example of where I would be really focused on assessing those sorts of investments. So whatever that may be for you, just get really good at that one area, and then it's okay to miss out on other investments. So there's a term in there's a term in crypto. So obviously, you've heard of like FOMO, right? Fear of missing out.
Yeah, yeah.
So the opposite of FOMO is JOMO, joy of missing out. So if you see the price of some coin skyrocket and you didn't invest in it, you can kind of beat yourself up about it and go, oh man, I should have listened to my friend or whatever. But you can't, it's not like Pokemon, right? You can't catch them all. So you just have to pick and choose, and then be happy with what you've chosen, and you just be satisfied with that, and then move on, and you can get the next one.
Yeah, and I mean, I think for someone who would have wanted to invest in Bitcoin when it was at its peak around $20,000, but didn't, would probably have some JOMO about not being there for that.
Yeah, exactly.
Yeah, I mean, you would have lost almost $10,000.
Yeah. No, I was just gonna say there's the guy a few years ago who we think he kind of had the first transaction, the Bitcoin transaction for goods. So he bought I think you probably read about it. He bought like a pizza for like 200 Bitcoin or something at the time.
I remember that.
And it's like, obviously like worth millions of dollars. So that guy probably had some real he has to have some JOMO, or else you just can't live with yourself. So
Yeah, no, I think that's. I mean, you look at the curve, and it's like people say if you would have invested in Apple in like the '90s, then you would have been so rich. If you would have invested in Bitcoin like 3 years ago and then
right.
sold in whenever of 2000 December of 2017, I mean that's like you Apple times 10. But
Yeah.
the whole thing is very interesting. So it'll be good to see where it goes. But you are in Japan and thinking about kind of that laser focus and what you have a specialty in. What do you see in terms of like crypto and cryptocurrencies and blockchain in Japan? What are people saying about it?
Yeah, Japan is an interesting market. So we kind of spoke about Indonesia a few minutes ago, and how they're digital natives, and what they're doing there. So Japan is kind of similar in some ways. So half of Japanese consumers prefer to use cash, and many of them don't actually have credit cards. So it's largely a cash based society, which you'll find out the hard way when you come visit here and you're trying to buy something in a grocery store and you're like, oh shit, I need cash. So uh, there's yeah, I mean, there's just the Japanese tendency to save money. They avoid credit. There's a lot of kind of historical reasons that are no longer true, but kind of merchants are still, I guess, de-incentivized to use credit cards, even though it's not necessarily more expensive. So I think that will change eventually. But the reason I'm saying that is because you have this huge gap, right? So all these people are using cash. So there's a big opportunity for other types of financial services and payment methods to come in. So crypto is obviously one method, and you have a lot of, let's say, banks starting their own cryptocurrencies. You have retailers. One of the largest electronics retailers is accepts Bitcoin. You have you have several blockchain startups here. To be honest, I'm not really excited about many startups here in the blockchain space. I haven't seen anything like Harmony that I mentioned before, or the Brave browser on that level. It's and I think that's just kind of the startup culture here. There's not that many, but I think most people are not using cryptocurrencies. I mean, it has the kind of the green light from the government. It's considered legal tender. So some companies let their employees choose. Just a few companies, if they would like to be paid in Bitcoin. So that's kind of interesting. But it's still a very small amount. I still think user adoption is quite low, just like it is in the US. But again, I think this could change pretty quickly once you have a company like Facebook, or in the US, you've got, I think, Starbucks and Whole Foods recently announced that they're going to be accepting Bitcoin. So that could be, those could be game changers. So.
Yeah, so if we could just get past that volatility, then we could just be kind of living here. So anyways, winding down to the end, do you have any final thoughts or any kind of departing advice that you'd like to share?
Well, I would say don't look at the news too much for financial advice. I would say really do your own research and play around with small amounts of money that you're willing to lose if you're thinking about investment. And I also think it's not too late. A lot of people look at the Bitcoin when it went up to 20K, and they always a lot of my friends will say, "Oh, it's too late. I missed out." And I don't think that's true. There's a lot of other projects, interesting projects that are coming out, and it's certainly not too late. So don't be discouraged, and yeah, just feel free to jump in the rabbit hole and start kind of exploring and learning on your own. There's so much on YouTube and online nowadays, so it's there's no excuse not to. So
Sweet. Well, thank you so much for coming on today, Misha.
yeah, dude, thanks for having me. I really enjoyed the chat, and let's see where Bitcoin is in a few months from now.
Again, that was Misha Yurchenko, the author of Bullish on Bitcoin, 37 Strategies to Profit in the New Crypto Economy. I hope you enjoyed that interview. I certainly did. It was a very informative, conversational, and I learned a lot about cryptocurrencies and ways to invest. But even beyond that, I think I learned a lot about investing in general. I've actually started investing a little bit of money in a few different stocks. I have some in Apple and Disney. So we'll see how that goes. I think Disney Plus is going to be kind of a big thing coming out pretty soon. But overall, I just really enjoyed that conversation. And I also have enjoyed the next few conversations that I have for you coming up with Mark Boron on the regulatory side of cryptocurrencies, blockchain, and the like, and where that technology is headed, and with Kelly Weaver on how a PR firm manages to keep the reputations of blockchain companies and cryptocurrencies very high and public opinion favorable. So those are two more interviews coming out and two other ones that I just absolutely enjoyed and cannot wait to share with you. So I hope that you'll go over to iTunes, Spotify, but wherever you get your podcasts and subscribe. We'll be here with new episodes for you. With that, I'm Luke Scorzel, and you are listening to Build.